Welcome back to Liberty and Finance. We're always delighted to have this returning guest, and this time we've got him live and in person, ready for your questions. We're talking to Andy Schectman, the CEO of Miles Franklin Precious Metals. He's here with us live, and I'm in my studio, he's in his, and we're happy to answer your questions. If you want to make sure you have a question for Andy that gets answered, please make sure that you subscribe to our YouTube channel, because you can only enter the live chat to enter a question live if you are subscribed. Those of you who are in the live chat, welcome. I see a lot of familiar names there: Neil, Darren, Fazdal, Frederick, Alan, Great Nate, everybody. And Andy, thanks for coming back to Liberty and Finance for this live stream.
Yeah, it's funny. I had 3 or 4 podcasts today. I had a long day, and so I thought my night was done, and I went out and took a hot tub outside, and I'm sitting in there. My wife comes screaming out the door. You have your live stream. Oh my gosh. So I made it in the nick of time, only to have to rearrange things as my computer blew up last night. So it's all good though. It's all good. Glad to be here.
The audio is a little bit echoey with the headphones, but we'll do our best. And let's see if we can get some of the viewers' questions. We're going to jump right in here and get viewers' questions answered. Folks, I just put a reminder at the top of the live chat to remind you to put your questions there for Andy. Andy, one of the big questions we want to kick off with was that the gold price, which has been kind of in a doldrums for a couple of months, finally started going basically at a 45-degree angle about 2 weeks ago and hit a new all-time high over the weekend, and then quickly dropped by over 100 points. But we've had some analysts on talking about what they saw from a technical standpoint and commitment of traders and market volume and all that. I'd like to get your view of what you think is happening with the gold market right now, whether you think that this new all-time high signals things to come.
I do. And can you hear me okay, by the way?
Yeah.
Okay, good. I think I had these on backwards. The commitment of traders part, yeah, you had the commercial banks going very short, taking the other side of the money managers' long positions. And this is what they typically do: rinse, wash, and repeat. And the speculators, the money managers, push the price up. The commercial banks take the other side and are heavily short. Now, this is a game that won't end well, I guess would be my take on this, in an environment where there is evidently a large degree of shortages on industrial sized bars, both gold and silver, large amounts of deliveries. It will not end well. The question is, at what point do the commercial banks stop shorting a rising market? And that's what makes this market so different than others, is that the commercial banks short a rising price. And that's what makes it very unusual. Most people would short a falling price. You don't short into a bullish market unless you have very, very, very deep pockets. In an environment like we are geopolitically right now, it's enough to put companies out of business. And let's talk for a minute why I think the price ran up. And of course, everyone's got different opinions. But when you say more to come, I sent you that article last week after I was on your show. And I've been talking forever about the BRICS and the ultimate loss of the petro status. And I've talked at length about, ad nauseum, about Saudi Arabia's role in all of this, in joining the Belt Road, in joining the BRICS, in joining the SCO, in telling the folks at Davos that they're willing to take other currencies for oil, or listening to it. But it's different when we see the 7th largest oil producing country in the world, a country that just so happens to be hosting 200 countries for a United Nations summit simultaneously, presided over by the chairman of the state-owned oil company in United Arab Emirates, who then tells the world the day before the summit, we're no longer taking dollars for oil any longer. This is a massive shot across the bow. And I think this is emblematic of more to come. Now, it's not as climactic as if this was from Saudi Arabia and all of OPEC. But look, these guys just were admitted to the BRICS alongside Saudi Arabia. These are the people that are making trades with France for liquid natural gas and accepting yuan. These are very substantial moves that will ultimately affect the settlement value of the dollar, maybe someday the reserve status. But all of that settlement, we call it logarithmic decay, all of that loss of settlement, little by little by little by little, and then all at once. We're not at the all at once yet, but chipping away at the dollar hegemony will absolutely reflect positively in the price of gold and silver. But the cartel doesn't want to let it run yet, and it's not going to be easy. But maybe we've established a floor here, and I guess we'll see. We'll see what the next week or two has in store. I'd like to see it bounce right back up here before the end of the week. Excuse me, before the end of the week, and maybe we will.
Well, we did certainly put in the highest monthly close in the history of ever. So that was something that's very significant for people who watch. So, for example, momentum traders, we have Michael Oliver on periodically, and he watches momentum, and he says that's a very significant event you need to watch for, is the highest monthly close. Steve Penny was on talking about how gold quickly moved, so it got heavily oversold on a tactical basis, on a short-term basis. But that needs to backfill and needs to retest. Gregor Mannarino talks about how markets don't just go in one direction. He wrote a book called The Not So Random Walk on Wall Street, and talks about the forces that are driving things. When you see increased volatility in the markets, look out below, look out above, because things can whipsaw both ways. So you don't want to get on the wrong side of it by, as you said, shorting against a rising market when there are powerful forces at play. There's also been Rick Rule with us monthly talking about, in the past 4 major metals markets, precious metals bull markets, he says gold typically moves first, and then silver typically moves faster and farther once it gets started. We've been watching for quite some time, and silver still less than half of its former all-time nominal high, and even less if you look at it in inflation-adjusted terms. Can you shift your perspective just momentarily for us to silver and tell us what you foresee going forward if this plays out as other major precious metals bull markets have in the past?
Well, one would think so. I think there's big things in store for gold. I mean, very big things. When you see the amount of gold that is being gobbled up by the countries of the world, only second to last year were their acquisitions this year, which was an all-time high. And the central banks are buying more gold right now than in any time in the last 70 years. And so when you talk about gold leading the way, it's certainly being driven by the central banks. But look, India imported 60 million ounces in October. China imported 10 million ounces in October. That puts 360 million ounces that we know of that India imported really in just over the last year and a half, 2 years. And there's a lot more that we're not being told about. I think silver is certainly enough to make you pull the hair out of your head. And a lot of people have bought silver perhaps for reasons that I typically don't recommend buying silver for. I mean, you could buy silver equities, but to buy silver to get wealthy is something you better have stick-to-itiveness, as my 6th grade teacher said, stick-to-itiveness, in the respect that you have to have strong grip, you have to trust your gut. But I will tell you that I believe it is probably the most undervalued, underappreciated asset on the planet, with perhaps the greatest upside potential. It really is. But it bucks conventional wisdom. It is counterintuitive. And I'll also tell you this, that one of the biggest mysteries of my career will be that there is a shortage in industrial size bars across the globe, whether it be COMEX, LBMA, or huge deliveries coming out of PSLV by BlackRock, or large distributions or deliveries coming out of SLV by the authorized participants, 50 plus million ounces delivered off of COMEX. I mean, you're seeing all this silver disappear on the industrial side. And you have Ted Butler screaming, and I think Ted's fantastic, smart guy as it pertains to the COMEX, that there is a shortage, and yet this is the best availability and the lowest premiums I've seen on silver for over 4 years, and it really is a head scratcher. And if it makes me really question, like I can't quite wrap my head around it, I can only imagine the people who bought it and are waiting for this big move. But with that being said, from a standpoint of fundamentals, there's nothing like it. It is disappearing in nature. It is increasing in demand. It is decreasing in terms of above ground stockpiles. There's tremendous deliveries that are moving eastward that will never come back. And it's interesting in looking at the Silver Institute numbers. Well, they revalued their or readjusted their numbers, saying that they were off on some of their numbers. And then you have this summit where they're talking about quadrupling this summit just this other day in Dubai. That they're going to quadruple the amount of solar panels, which will, if not take the majority of all the silver mined each year, who knows? But what the Silver Institute ignores is the amount of silver that the military industrial complex is using. And this, to me, is something that, when you talk about why silver is underperforming, why it's been held down for so long, you have to wonder how much silver goes into all of this high-tech weaponry and all of this aerospace stuff and everything that needs silver in it, like 500 ounces in the tip of a Tomahawk cruise missile. Well, how many missiles are being fired around the country and around the world, rather? So what I'm getting at is that there has been big forces at play trying to hold down the price of silver. And I believe a lot of it has to do with the constant war that's going on around the world and the amount of silver that is needed to supply the munitions. And so you got big banks and big interests and big money trying to hold it down, but it's still manipulation. And I don't care how powerful these players are, it's still manipulation, and all manipulations will end badly. And I think we're getting to that point where the drawdowns industrially will start to massively affect what is available on this side of the table. And you put it all together, Dunnigan, with what's happening around the globe, I don't think there is a better, more distorted asset that you could own, period, on the planet than silver. But if I had one trade to make, it would be gold, because it's the only other tier one asset. So that probably just confused people more than not, but I will tell you that I think from an investment standpoint, I don't see a better one on the planet. Honest to God, I do not.
One of the things you've been talking to us about for the past quarter or a quarter and a half is this alignment of the stars, where we have lower spot prices than we'd seen in quite some time, lower premiums than we'd seen in years, and better availability than we've seen in years. Now, most people would argue that the spot price has, because of the run up in the past couple of weeks, is no longer this triple perfect storm for a buying opportunity for those wanting to accumulate. But it looks like we may get a little pullback here and be able to regroup on that perfect storm for people who are looking to accumulate. A lot of the people who are waiting to be patient value shoppers and buy on a periodic basis were hoping for a bigger pullback, and then just gold just took off. It wouldn't stop. So we'll see if they get another opportunity to accumulate more while it's still available.
And I think in buying physical, you buy it, and you buy it on a systematic basis. If you're a swing trader, yeah, you buy and sell the peaks and the troughs. But in this world we live in, that's all of a sudden gotten kind of freaky in every single way. Whether you're talking here at home and in all of the social issues and the unrest, or around the world. I think there are very significant reasons to look at price as important, but not the defining characteristic or the defining factor is why you should be owning this. It's money, it's wealth, and the biggest money in the world is accumulating the heck out of it, using these suppressed prices to run cover for it. And we'll all wake up one morning and it will all be very clear to us when gold and silver gap really, really high, not the 50 bucks, 60 bucks, or 70 bucks we saw Sunday, but multiples of that. And that's when the commercial banks or the people who are holding it down just say, enough, we can't do this. And it just goes and finds equilibrium with where it should be after being suppressed so voraciously for such a long time.
You were pointing out also about a month or two ago, starting to get a price gap between the paper markets in the West versus the physical markets in the East. Do you want to touch on that before we move on?
Yeah, well, when you see gold priced at $100 more per ounce in Shanghai and silver up to $2 more an ounce in Shanghai, over London and over Chicago or the New York, over the West, you start to see the heat slowly being turned up. And that's arbitrage. And I think they will do all they can to slowly, people would say, well, why don't they just buy it all up? They have so much money. Because in a world where information disseminates so rapidly, in a world where everything is at your fingertips, You can't do that. You must misdirect. You must be covert. You take your time. You're methodical. It's the same reason they didn't issue a currency at the summit, the BRICS didn't, in August, because it would have been shotgun. They're doing things methodically. There's up to 40 countries that have expressed interest in joining the BRICS. And if you're going to issue a gold back or a commodity back currency, well, you better have mass adoption. Well, the same thing is true here. You better do it the right way. And if you want to siphon off all of the commodities to build your war chest for what comes next, you do it methodically, slowly, and you misdirect with price. It is the greatest tool of misdirection. Like I say, I got the guy across the street, Forbes top 40 financial advisor in Florida, and he wouldn't know a gold and silver coin if it hit him on the foot unless the price drops. Then he tells me about it. And the point of it is that, you know, this is just beginning, and there are so few people who understand the value right now that you can be found, or that can be found in gold and silver. But it's not going to be easy because the mainstream has no clue. The mainstream is not part of this. So on these pullbacks, do what the big money is doing. They're misdirecting you. They're misdirecting the most sophisticated investors in Florida and the money managers who are managing billions of dollars. They're misdirecting everyone. And it's the few people who have trusted their gut and their intuition and can think as a free thinker outside the mainstream box that I think will benefit greatly when this switches. And in my heart and soul, I know we're going to have that moment. And I think it's getting closer. When you see the UAE saying, we're not taking dollars anymore, the day before they invite 200 countries to their summit, and presided by the head of the oil, the state-owned oil company. I mean, is that coincidence, or is that a shot across the bow? This is how it happens. This is the little by little by little that is chipping away at that all at once moment.
Yeah, in the past, that would have led to regime change within a short period of time. It'll be interesting to see if this is in fact now a tidal change, and that's not going to happen because
I don't know if you saw what Lindsey Graham said. I'm sorry to interrupt you.
Go ahead.
The other night, I was watching Fox, and he said, to my friends in the United Arab Emirates, if you join the BRICS, you're an enemy of the United States. I almost fell off my chair. I mean, they're starting to notice. This is not an entity to be taken lightly. I mean, you're talking two of the three largest nuclear arsenals, a greater GDP, greater population. They have all of the energy and all of the commodities. They are not to be taken lightly. Recency and normalcy bias is something you and I have talked about a lot, and that could be the downfall of this country and of this institution or this government rather. You know, I mean, it's something that should not be taken lightly.
Yeah, Warren Buffett's quote from a few years ago was the 19th century belonged to the British Empire, the 20th century belonged to the United States, and the 21st century belongs to China. Well, it seems like China is now collaborating with a boatload of other countries as well. He said invest accordingly. Got a question here because you've talked with us several times about counterparty risk. We're talking about a lot about the events that are occurring and the price action, that sort of thing, but the why behind it. A lot of the clients who reach out to us are trying to reduce risk. And frankly, that's where our channel came from. Reluctant Preppers turned into Liberty and Finance, talking about preparedness and reducing risk. A lot of that risk is counterparty risk. People are concerned about their banking, about their banks. They're now that the book about
the
Great Taking comes out, people are concerned about they own nothing in their. They know they're on nothing in the banks since the Dodd-Frank Act. Now they know they own nothing in their brokerage accounts. They're thinking about their retirement. They're thinking about their insurance. There's a question here from Great Nate. He says, has Andy run into any clients who are surrendering older whole life insurance policies to get their cash out for gold due to the risk that the insurance company, could fold like a bank can fold?
No, but I think that's smart. I truly do. I think it's better to be your own insurance company, because where do these insurance companies invest? They invest in treasuries and they invest in securities. So yeah, I think it's a smart deal if you can do it. If you see the wisdom in doing that, sure. I have a very good friend here in my neighborhood who has helped me with some clients before, and that's what he does, life settlements. And not a bad idea. I think removing counterparty risk is a good idea. And if there's even value in term policies, he told me, which I was kind of shocked by. But yeah, I think that it's not a bad idea if it is something that is just there and it's not a necessity. You bought it earlier in life, you contributed to it, and you know success has got to a point where it's not as important, then absolutely I would do that. Sure.
Yeah, there's a lot of executive level people who that's been a major portion of their compensation for a long time. There's another question here
That was
about
a great question.
yeah, yeah. In fact, there's a whole bunch of people below it that said, I did that. And Alan Ritter says, I did that. Fazdal says, Nate, great, Nate, that's a good question.
Yeah.
So I've definitely seen myself as a broker, clients reaching out with major life events, whether they've sold a property or whether they've got an inheritance or whether they've got a retirement lump sum or whatever, or just frankly getting nervous about the fact that their retirement funds are tied up in a 401k. And if they're separating from that employer, not wanting to keep it in the market, not wanting to
Yep.
keep it in the bank, that sort of thing. There's a question here about what happens with the volatility in the precious metals exchanges and how it affects brokers, or excuse me, dealerships like Miles Franklin. Daryl kindly says, was Miles Franklin buying gold Sunday night when the price rose drastically? How do you plan on dealing with this scenario in the future if and when it happens again?
Well, I mean, that's why we hedge all of our inventory, and there are companies that don't, and I find it to be gutsy and borderline risky, if not some other adjective that I'm not going to say. But I'll just simply say that when we're hedged, if we have metal in house, we will sell the equal amount on COMEX so that we have market neutrality in our holdings. And oftentimes, what we do going into a weekend, if we sense that there is going to be activity, we will go long on COMEX contracts. Because if you don't do that and you get lots of business over the weekend, then when the market opens up Sunday at 6 o'clock, you are then exposed to the leap right then and there. So that's typically what we do on every weekend. On Friday, we'll buy some COMEX silver and some COMEX gold contracts long into the weekend. If we suspect it's going to be a crazy weekend, typically I'll get a phone call and say, how long do you think we should go? I'll give you a good example of how that can be dangerous, and that was silver squeeze. We knew that it was going to be a crazy weekend then, and my trader Ryan called me and said, what should we do? And I said, well, how about, he says, we normally do 4 or 5 silver contracts into the weekend. I said, how about 11? I don't even know why I said that, but that was 55,000 ounces that we bought into the weekend. Well, he called. I was getting phone calls that night on a Friday night saying APMEX and JM Bullion are not taking any orders anymore. Well, I get a call the next morning from him, and I thought that was strange. I didn't quite think about it the right way, but the next morning, Ryan calls me and he says, we've sold 90,000 ounces. You're 45,000 ounces exposed to the open. And everyone was expecting the open to gap up. And fortunately, we were able to cover it pretty quick, but it still cost us $2-3 an ounce when it opened up that high, just like that. So there is a risk in this volatility, absolutely. And there are no easy ways, but this is what the futures market is used for, to offset risk. It's turned into a gambling casino, but yes, we are keenly aware of it. And in greater times of volatility, we take steps to protect us both long and short.
In addition to being a gambling casino, it's also a place where the tail can wag the dog. And that's what you've talked about as far as
it is.
Yeah, yeah. Now, here's another one we've been hearing from more and more clients, and that is in their sort of neck of the woods where they go into a local coin shops and that sort of thing, they see more sellers than buyers in some of these cases. And we've been talking with people about why that is. One of the theories that's emerging is people have been waiting an awful long time who've been having their liquidity in bullion, like as Rick Rill says, keep cash liquidity, but also keep bullion liquidity. And there are life events that are necessitating some of these, or opportunities that are arising that are making people want to liquidate some of their stash. Others are really getting pinched hard by some of the inflationary changes that are happening in the world, and people are really having a hard time. A lot of people, we have almost record. Michael Pinto, when we interview him, he talks about record debt, credit card debt, et cetera, student debt, et cetera. So there's a lot of people who have some medical bills, medical costs are skyrocketing compared to regular, so the CPI headline numbers. Lots of reasons why people might be needing liquidity. Any data that you have or any anecdotes that you care to share about this phenomenon that several people have observed in their neck of the woods, where they're seeing more local sellers than buyers at this time, as far as what might be pressuring people to do that?
Actually, I've seen more people sell over the last week or two than I have in the last 4 years. I'm kind of surprised by it. And I, opportunity, I guess, if you want to say buying short-term treasuries is a good place to go. That I have my feelings on that, but I wouldn't say it's a bad place to go. In terms of opportunity, I don't think that's it. I would say it's one of two things. It's either exasperation, which is a good contrarian indicator, or it's more likely the fact that, yeah, you have 17 trillion in record household debt, 1.6 trillion record student debt, 1 trillion record credit card debt, record mortgage debt, everything, and rates are going higher or have gone higher on credit cards, and inflation has made, the things that we need much more expensive. I just think people are getting pinched. You go to McDonald's and it's $18 or whatever. It's not even worth going there anymore. It's not that good anyway. The point of it is that everything's expensive, even going to McDonald's. And you go to the grocery store and it's $100. I remember I bagged groceries when I was 15 years old in 1985. And if $100 came through, it was like a lady or someone with two carts. And I thought, geez, now $100 is a couple boxes of strawberries and a couple of steaks. And so I just think there are people that are in need of money, because this is the wrong time, the worst time, in my opinion, to let go of metal if you don't have to.
Yeah, and I want to say that statement from you is with no conflict of interest. And myself as a broker, when people come to sell back to us, if they're cashing out, there's still a commission. There's a small percent or two that can be made. But it hurts my feelings as a preparedness person who's been in this arena for 10 years, interviewing dozens and dozens and dozens and dozens of people about preparedness, to see people having to liquidate some of their solid assets for liquid assets,
Please let me
just to
just
deal
say
with
one
heaviness.
thing. This is the whole reason that I am honored to work with your family, because I feel the same way, because you're for real. And there doesn't have to be a separation between capitalistic intentions and good intentions. You can run a good business and still want to do right by people. And your whole platform, and really for the last 3 years, my platform is talking to people. And it is true, to put yourself out there and to say all of these things. I don't, and you don't, and the people on your show don't say it just for the heck of it. And you're right. I would feel bad as well. I think it's the wrong time to do it. I think it's one of those things where people held on all that time, and then right before you read the book, The Great Taking by David Rogers Webman. If you don't want to read it, it's 100 pages. It's for free. YouTube has it, and he's actually narrating. It's about an hour and 20 minutes, and he skips some stuff, but it's scary, and it talks mostly about securities that are being held in these custodial accounts. Well, the Bank of International Settlements just came out and said that the 1 trillion plus in securities and the 600 or 700 billion in government bonds held by these depositories or these custodial accounts will only exacerbate problems if there are market problems, and something to that extent. And it goes, really dovetails with what he is saying about this, and it's a little frightening. Read that book and you will reevaluate, and you will understand what the old concept of, you don't hold it, you don't own it, the concept of counterparty risk. That's what this is all about. So yeah, yes, let's just say yes. I think that I beat that into the ground, but
That's okay. So we're half hour in. We're going to go a full hour tonight to give people time to get their questions answered. But I wanted to give you a chance to quick point out the new weekly specials for those who have to leave at a half hour mark or before the hour mark, so they don't miss them in the end. And we'll wrap back and get to more viewers' questions here.
So I'm going to give a fourth one that I just told, and if you look at Slack, you'll see I've told everyone that I'm going to sell Silver Eagles for the next week at $4.99 over, and that's what I want to do. And then we're going to do junk silver at $3 over, Dimes, quarters, half dollars, minted prior to 65. And then I think it's, you have to help me here. It's the 100-ounce bars dealer's choice at $1 and something over.
Yeah, let me get there real quick. I'm got the you're going fast. The hundred ounce silver bars are $1.45 over
Yep.
spot.
Yep.
And then
And that's cheap.
I'll share the get back there. Hold on.
And those dimes and quarters, that's as cheap as we've sold them for in 4 years.
And got another screen
And
share.
I think
This
we
is
have
your
some
junk silver one.
$20
Here you
gold
go.
pieces.
Yep. First, this is the constitutional silver, $3 over spot. And then we've got the $20 gold pieces. Yes, we do. Hold on. Here we go. 170 over melt for $20 Liberties. And those are AU, almost uncirculated grade. Can you clarify for people what the difference is between these that are not slabbed and graded and they are circulated, but they're almost uncirculated condition?
Yeah, so they're, they're very, very nice. They are what the AU really says. They're almost uncirculated. They are, 100-plus-year-old circulated coins that were in someone's pocket, tell a story, I guess you could say. I mean, I love them. They're my favorite coins in the world, those in the St. Gaudens, but they're not certified. And really, you don't want to certify common date $20 gold pieces in anything under typically MS62 grade. If they were rare, I mean, that could be a coin from, like the 1850s or 60s. And, in that grade, it could be worth $20,000. So you definitely want it to be certified. But in these grades, and common is relative. In 1904, 1907, yeah, they made, millions of them, 7, 8, 9, 10 million of them. But what is common when you're talking a 100-year-old piece of gold? It's not really common. It just doesn't necessitate having them certified, but they're very, very nice looking coins.
And so sounds like we got 4 specials: the junk silver dimes and quarters at $3
I sprung
over.
that one on everyone. It's just something I want to do. And
American Silver Eagles at $4.99 over.
Yeah. And we're doing that one for a week. And so, but there's a lot of good value out there. I mean, there is. It's the stuff is as cheap as I've seen it since 2019, and it doesn't make sense to me, not even a little bit. But maybe that goes hand in hand with people selling too.
We have an observation from a longtime viewer Fazdal, who says, "I'll accept fiat because my mortgage is denominated in fiat. I don't know what I'll do when I pay that off." So there's a lot of questions we get from clients who realize that in order to live in this world, you have to transact in the currency of the surrounding environment. But we're also conditioned to thinking that only can happen in fiat. And most people we have talked to personally, we encourage them to consider how the world can change and has changed. In fact, in other countries right now, where people are making transactions in non-fiat, directly in, for example, small denominations of silver or gold. Any observations from you or thoughts when you talk to people about why they need to sort of think outside the current regime that we're in right now when thinking about preparedness and having their hands on, like, for example, the constitutional junk silver dimes and quarters that are on our special? If they say, well, gee, I can't take it down to the grocery store today and use it at the grocery store, so what good is it for me?
But how far away is it? How far away is that done again? I mean, Texas and Idaho and Alaska and Wyoming and North Carolina and Oklahoma and Arkansas and Missouri. And how far away is it? You pay your property taxes. So,
you're listing states that they're enacting legal tender laws for gold and silver. Yeah. So folks, go to soundmoney.org. You'll see some really impressive results, and the number of those states is increasing. In fact, we're going to be interviewing Missouri Senator Bill Eigel this week, because he has been the one who's introduced the bill, the gold and silver legal tender law bill that's coming forward in Missouri. And we've had Patrick Holland on there a couple of times talking to us about what the contents of that bill is. A senator himself, who's going to be bringing the bill forward, to be on Liberty and Finance later this week. Go ahead.
So I'm going to make a suggestion that people think about, and there's going to be pushback when I say this from some people, and it's logical pushback. But being a U.S. Mint authorized reseller, we were nominated by Prudential Beige over a decade ago. And the mint really doesn't make a big deal about it anymore as they did before, but it was something at one point that I was supremely proud of. And the US Mint has meant a lot to me and done a lot for my career. But over the last 3 years, I have said to everyone on your channel, don't buy Silver Eagles, they're too expensive. And most of the people who have bought during the tough years of 2020, 2021, and when I say tough, I mean lockdown and uncertainty and all this stuff, and premiums and supply chain distortions and high costs on coins, they bought bars. Kilo bars, 10-ounce bars, 100-ounce bars. I would like people to think of the wisdom. And I don't know how long we can do this because who knows where premiums go. But I would like, especially in an IRA, the wisdom of, at this point, because of this drive, I never thought I would see ever, done again, states that are doing this. There's an awakening little by little, maybe a little resistance. You know, the American spirit is alive. And the wisdom of trading those bars into American Eagles. Now, you will lose silver, right? I mean, let's say the bar bids at just over spot and the American Eagles are at $4.99. Do the math. But it would have cost you at least twice that, $10 to $15 more at any time over the last several years. So question becomes, if we see an event, what happens with the Silver Eagles again? And now that you have states that are embracing them, accumulating them, using them as legal tender, does that add fuel to the fire? Maybe. Same thing could be said for the 90% constitutional, because you remember the premiums are really high on that stuff too. So I just like people to think about that. That's something we can do. We can assist in shipping it back. I'm not saying it's the right thing to do. I've done it with some of mine. I just think it's compelling to think about it that way. You have to think outside the box, to your point. And if you don't think outside the box, look, unconventional times call for unconventional thought. And this is a really crazy world we live in. It's unconventional. So I thrive in unconventional times. I just think if you follow the herd, you're in trouble. And look, you know, here I am doing these podcasts, and you know, I'm not following the herd. There aren't a lot of people, haven't been a lot of people saying the things that I have for a long time, and I'm okay with that. But I say this as no guarantee, but if I had my druthers, all I would own would be American Silver and Gold Eagles or U.S. Mint products like the old coins or the junk silver. But to me, living in the United States, there's something to be said for that.
Yeah, you had alerted people when the gold silver ratio got so out of whack about a year ago. We were at 125, we were at 100 to 1, etc., that you said, guys, this is an anomaly. This is statistically such an aberration. You have to pay attention to this moment. And you described to people how they could consider accumulating silver at that ridiculous ratio to gold and then potentially swapping it back into gold when the ratio returns to a normal range. Here's another example. We've been seeing premiums on Silver Eagles at crazy high $15 to $17, even down $14 as it came down. Here we are at $4.99 now, and it's a good time. My wife was telling me exactly the same thing in the past 2 weeks about swapping bars in for American Eagles. So
yeah,
a lot of minds that are kind of thinking outside the box, using your intuition, are thinking along those lines. Here's an observation from Daryl Kindly, might trigger thoughts from you. He says, I hope I never sell my gold and pass it all to my kids. I only sell silver when I need to pay my monthly bills. I keep nothing in fiat. So he's got a completely different model. It's actually the more traditional model, frankly, you know, rather than the experimental crazy model that our world has gotten us used to for the last couple of generations. Any further observations on that strategy?
Well, he's my kindred spirit. I mean, I've been the crazy guy that's done that for 20 years. And I, you know, people have thought I've missed out. I have on some things. But, you know, to me, it's wealth. When I started, you know, I've told the story over and over. I had to buy something every 2 weeks. That was the rule. My dad said when we started this company, and I still do it to this day. It will be 34 years. And I don't stop. It's not my investment. It's my wealth that I really do hope that I can pass it on as a legacy to my family. If I need it, I'm darn glad I have it. And it could be an opportunity too. Maybe there will be a time to sell it when things get back in line with, you know, find equilibrium with sanity. where stocks are trading at single-digit price-to-earnings ratios and paying a 6 or 7% dividend, where real estate is selling for reasonable levels based upon reasonable interest rates, and the distortions that we've seen for so long has made all asset classes really out of whack, and price discovery is a thing of the past right now. But to his point, yeah, to me, there are very few things you can pass on to your family that have both intrinsic and sentimental value. And it takes a little effort to sell gold and silver. It's a wonderful way to leave a legacy, and it's really a great thing to have if you need it. And it's a whole lot less risky right now, in my opinion, than leaving your money in these over-leveraged and undercapitalized banks that, heaven only knows what's in store for the banking sector.
Right. We have one more technical question on the question of swapping bars into American Eagles. Joe says, do you have to sell the bars and then buy the Eagles to do the bar to Eagle conversion?
Well, and that's in essence what you are doing. But, I could argue that is a like for like exchange, and you could just carry your cost basis forward. Any tax questions you would want to ask your accountant, but it is a like for like exchange in my mind. And but it is, so I guess it's really not a sale. To his point, it's an exchange where you're carrying your cost basis forward. So
yeah, in fact, both sides of that trade can get locked in simultaneously at the same spot price. So it's rather insensitive to spot price. You have a little bit of breathing room there to say, okay,
well,
let's
and
go
I'm
ahead
going to
and move
also, and I want everyone who works for my company, I hope they're listening to this, and to you and your staff, we will do what most companies won't do, right? And well, yeah, we will. We will use one spot price, not two. Look at Kitco and see what the bid-ask spread is. It's a dime or more usually, right? Especially in volatile markets. We will use one spot price. So you will get a bid price for your bars, and we will use that same spot bid instead of using ask bid, which would be 10 cents more. So we use the same spot. Most companies would buy it using the bid price and then sell it using the ask price, which is a deviation of 10 cents. You're talking lots of ounces that can add up. So hope everyone who's listening understands what I just said. I'll send out a memo to all of my staff, but that's something that I'm a big believer on. We're not going to double dip that way.
Right. Single spot price for both sides of the swap transaction. When it's like for like metal, same metal. That's the only way that makes sense. Okay.
Right.
Lee, we have one here about John DiLiberto says, wait until taxes must be paid in CBDC. I think we should return to that list of 14 and growing states that are putting their foot down and saying taxes can be paid in gold and silver. Any further thoughts on that?
Yeah, I mean, I think it's a heck of a statement coming from a state government that you want to pay your property taxes, we'll take your metal. I mean, I think that's a heck of a statement and a wise one as far as I'm concerned. So if nothing else, it's something I thought I would never, ever, ever, ever see. And what it will do when there is a banking see, look, bail-in legislation is written in, and the banks won't be bailed in. It will just take one bank to fail, and it's going to be chaos. One bank gets bailed in, and everyone's going to run. And FDIC has a fraction. They have 130 billion back in 18 trillion. So I'm not saying the whole system comes down, but what I am saying, you see one bank get bailed in, it's chaos immediately. And just like, when Silicon and Signature failed, it was chaos and they got bailed out illegally, I would argue, according to Dodd-Frank Act. But the next one that gets bailed in, you will have people who are understanding gold and silver because of these states who are enacting legal tender laws that never would have even thought of it. This is just adding fuel to the fire where it can go from plentiful and low premiums to gone like that. And there's so much money sloshing around out there that it wouldn't take but an event like that to really see premiums and availability 180-degree change.
Yep, there's a really good correlating comment here from Demi RI who says, Constitution says, the U.S. Constitution, that payment only in the form of gold and silver.
Species.
And that's one of the things that these states, there's a coming storm in our country. And it's one of those aspects of that is going to be between the states and the federal government, because the 10th Amendment guarantees that unconstitutional laws or edicts or policies or orders coming out of Washington can be null on their face when they arrive at the states. The states can declare them that are not going to be enforceable in their state if it's unconstitutional. And there's a good example of one, saying that if the federal government says you have to pay your federal income tax in CBDCs, but the states say, in our state, gold and silver are good for payment of taxes, it's a head-on collision between the states and the feds there. And it'll be very interesting to see what Missouri Senator Bill Eigel has to say about this week when we talk to him, because this isn't just a nice little thing that is, an honorary thing that states are doing. It's just, as you point out, the United Arab Emirates saying they're not going to take dollars for oil. It's a very brave thing to say historically against the United States. So similarly,
safety in numbers.
And states that are gathering together to say, we are going to stand on the Constitution and we're going to make gold and silver legal tender status, including for the payment of taxes, are really being very brave in the face of federal overreach and unconstitutional action. So it's going to be a very interesting time.
Couldn't agree more. And that's a Chinese curse, may you live in interesting times.
Let's see. Another one says, I just bought some 90% silver coinage from Andy this afternoon. Andy, get some rest. You're pushing too hard. It sounds like your voice is a little tired after a long day of doing a podcast.
You know what? I love these. I mean, yeah, it's a long day, but you've been doing this as long as I have. You understand when it's time to man up. And I don't know. I like having these with you, and you're a good moderator and ask good questions and make it easy. So I got energy. I can go another 12 minutes, it looks like. So I'm game.
No worries. Anyway, your fans appreciate your stamina and your willingness to field their questions and to be here for them.
Just water, by the way.
And Darren Smith says, back to Kevin's comment, I'm glad to have gold and silver outside the banking system. That's something that you've cautioned us about, and you just mentioned again moments ago, is people who have been sleepwalking and not realizing that these bank failures, they think, well, why do I care about bank failures? The FDIC always mops up the mess and life goes on. And you point out that, first of all, that's not what the law says is supposed to be happening. And second of all, not what Janet Yellen said will happen if they deem a bank to be not as globally, systemically a significant bank. But can you talk to us about what your view is on why we all need to be thinking about, from a preparedness standpoint, having assets outside the banking system?
Yeah, well, I mean, I've talked about Lael Brainerd, the number 2 in charge in terms of U.S. economic policy. She's a modern monetary theorist. This is her dream, to cull the banks, to issue a central bank digital currency and have a handful of commercial banks like they have in Canada, 4 or 5 banks like they have in most countries. We're unusual. We have almost 5,000 banks, regional and local banks, that doesn't make it easy to do their agenda. So this is exactly what they're doing. You hear all this talk of M2 draining, the money supply draining. Well, I mean, why would anyone leave money in a bank when you can go directly to the government and buy 1 month treasuries paying more than you can get even in a money market account, other than the daily liquidity? But you take all the risk out of the banking system. Well, this is what all the sophisticated money is doing. The people that aren't quite as sophisticated are leaving the regional banks and going to the commercial bank money markets, or those in need of liquidity. The big money, and when I say sophisticated, that's not the right word. It's just the wealthy. Well, they're leaving the commercial banks and they're draining the overnight reverse repo market, and all of that money, which is used to provide liquidity to companies and institutions and to the federal government, it is now going directly to the federal government, chasing yield. But when that slush fund is gone, rates will even go higher, which will put more strain on the bank, because the government is addicted to spending. And if the Chinese and the Japanese and everyone else is selling bonds, who's buying all of them right now? Oh yeah, it's us. It's the money managers. It's the hedge funds. It's the public chasing yield. That's why you're seeing this money supply draw down, because it's all going into treasuries. Well, this overnight reverse repo market, the 2 trillion that was there is dwindling and dwindling and dwindling. Now something's going on in the repo market tonight, because I noticed a big uptick in the repo market, which has been, very quiet for a long time. To me, that signifies there are people in need of liquidity. So this is a situation that is very fluid, but I will tell you that I suspect ultimately there's not going to be this pivot and interest rates falling like everyone thinks is going to happen. I think your rates are going to go higher. And whether it be, I suspect it will be more along the lines of the market dictating that more than anything. And when rates go higher, it puts more and more strain on the banks. So yeah, keeping your money in the banks right now is as dangerous as it's ever been, as far as I'm concerned. And, why not remove that counterparty risk if you can? I would say having a larger amount of gold and silver than you normally would is not a bad idea. And taking money that you normally have in savings and putting it directly into 90-day or less treasuries, directly at treasurydirect.gov. You want to take all the bank risk out? Do it that way. If you got $1 million in a business account that's just sitting there, idle or something along those lines. Let's just say you have a big business, you got this money sitting there. Why? What's it sitting in the bank for when FDIC is a scam? Why is it sitting there when the banks will be bailed in? Send it to treasurydirect.gov. Give it to the federal government, because if they fail, we got bigger problems on our hand. And you can keep it in ultra short. 1 month treasuries are paying, 5.5% now? To me, it's a whole heck of a lot smarter, but that's what the big money is seeing. They're leaving the bank, and that's putting greater and greater and greater stress on the banking system.
A quick note before we leave the topic of banks, and then we'll have to wrap. We have a comment here from Rick Newcomb saying, Dunnigan, can you answer my question I asked earlier about moving from banks to credit unions? When we talked to Gregor Manarino, he said, in his view, there is, in some ways, one element of risk that's not present as much in credit unions as there is in banks, because they don't tend to rely so much on derivatives exposure to make their profit, that because they're owned by their members, et cetera, they are able to do things more efficiently with lower margins, et cetera, and they can survive without having to take as big of risks, which then are of course borne by the poor depositors who don't realize they're taking those risks. But any thoughts from you before we leave that topic?
It is a little bit better, but they still have the same fractional reserve
business
model as everyone else. So when you put your money in those banks for the last several years, they've been offsetting it with treasuries. So all of the bank balance sheets are really in tough shape. I mean, you could say, who depending upon who you listen to, between 600 billion and 2 trillion in unrealized losses. So that's equity that's gone out of the banking system. That's, half of the equity in the banking system. So yeah, it's better. If it were me, I would just simply say this: you have to have a bank. I get it. Don't have more than 250,000 in it. If you do, it's foolish. It really is. So no more than 250 in any one bank, and you live within the system you have. You can't have all gold and silver, but these are very unusual times where I truly believe the banking system is the target, or the linchpin, or the fuse, whatever you want to call it. It is where the trouble is going to really not only start, but be recognized by the masses, which is going to kick things into a higher gear in this economy.
Before we wrap, would you like to remind people what the specials are before we, you threw an extra one in there, but if you could just run through the ones that we already have up.
Well, I think it might be better if you do it, because my brain is kind of like a Nerf ball tonight.
Okay. First, I'll bring up the 100-ounce silver bars. Yep. These are dealer's choice, $1.45 over spot per ounce while supplies last. Next, we've got the 90% constitutional silver.
Good deal there.
Dimes and quarters, and those are at $3 over spot per ounce. And then
we were buying that stuff back from the public for $8, $9 over spot, over consistently for a long time. So yeah, it's cheap.
And
you got the Silver Eagles at $4.99 and the AU 20 libs at $1.70.
There you go.
Over.
Yep. And so those are the specials this week. Andy, just always grateful for your presence here. Let's just see if we have one more
Yeah, I
question.
got 4 more minutes. If there's
Hold on a second.
anyone's
Go
got
back
some more, let's
back
do it.
to the live
And I'm
stream.
grateful to be here, Dunnigan. I truly am. You are a very, very good person, and so it's an honor to be here, and everyone on your show. And I've talked to so many of the people who listen to you. It's I like these better than talking to computer screen all the time. I like talking to the people out there, so it's kind of
Yeah.
cool.
Yeah, we have an observation here regarding, you just mentioned the FDIC being incapable of really protecting the vast majority of deposits on account. Alan Ritter says the FDIC is already broke from the March bailout. Any thoughts from you as far as how real the ability of the FDIC to protect the massive?
It isn't. I mean, they borrowed 174 billion from the Fed to usher the orderly transition from Silicon and Signature. They are insolvent. They are broke. Their assets are under 130 trillion. And take the commercial banks out of it, you still got 7 to 10 trillion in commercial and regional bank, or excuse me, in regional and local bank deposits that are being backed by them. So they're wholly underfunding. And look, there's trouble right now with big banks. You look at TD Bank in Canada. I've talked about them for a long time on Jean-Claude's podcast. He's in Canada, and he just showed me today that, he said, you said this 8 months ago, and there's talks about big problems. I wouldn't be surprised to see a bank like Bank of America. Look at their balance sheet. It's putrid. It's ridiculous. Maybe they do sacrifice one of the big commercial banks to blow this whole thing up, to get the whole ball rolling. I don't know. Their balance sheet is ridiculous. And who knows? But I'll tell you that if a bank like Bank of America failed, their derivative position is many times what the FDIC has. And so, yeah, the FDIC it is less than, I think, 1% backing. If you have 120 billion backing 18 trillion in deposits, if you put the whole banking system in it, I don't know. It's a piece of dental floss backing the underneath the high wire. If you think that's going to save you, well, there you go.
I always love listening to your metaphors. Okay, everyone, thank you so much for being here. And guys, if you don't want to miss a single episode on Liberty and Finance, including all of our interviews with Andy, make sure that you do sign up for our free newsletter. We send out one email per day. So you go to libertyandfinance.com and put in your name, your email address, click submit. Make sure you make sure you confirm on the confirming email. Then you get one email in your inbox per day with our latest interviews and any of the weekly specials that Andy brings out, so you won't miss any of that. And Andy, this has been a real treat for all of our viewers. We broke 95,000 subscribers over this past weekend.
Congratulations.
And that's just on YouTube. We're also on Brighteon, Rumble, SoundCloud, a whole bunch of other places. So we're well over 100 grand of subscribers watching.
Well, maybe we should pull an all-nighter in that case and see if we can get that up to 100,000 by morning.
The problem is we both be on the table. Oh man.
Yeah.
Well, anyway, thank you everyone for being here. Andy, as always, thanks for joining us. And folks, this was really cool to be able to spend this time with you. God bless every one of you and your families. And remember, don't let anyone divide us. We are Americans. We are free people, and we support the traditions and the Constitution of our country. And we respect everyone out there who wants to support their beloved countries, and don't let those so-and-sos take that away from us, and don't let them divide each other against ourselves, because we all want to be free. So thank you, Andy, for joining us.
You got it, brother. And God bless you and everyone out there. Happy holidays, and look forward to catching up with you again real soon, Dunnigan.
Excellent. Take care, everyone.
Bye-bye.